So now what I'm going to talk about in this webinar is how do we use, as I say, the Alpesh Patel Special Edition in order to find equities. Actually, of course, we can do foreign exchange as well, but I'm going to talk about how we find really good stocks. And let's say in the next few moments, in the next 45 minutes or so, what I want to do is give you all that information distilled from all those 16 books, those 200 columns, all those TV interviews, and how we put it into Sharescope and how you can use it to save yourself hundreds and hundreds of hours of research so you can cut to the chase and get views on every single stock. Either you want a view on stocks you already like or you want the names of stocks that we like. Either way, you're catered for. And let me explain how and why we do that. So, in this part, as I said, the favorite bits of the Alpesh Patel Special Edition, touching upon momentum and exit strategies as well in this. Now, one thing we knew what people wanted when we were designing the Alpesh Patel Special Edition APSI was they obviously wanted some simple rules. So we wanted to simplify things as much as possible. There was no point my going into massive pieces of research and saying to you at the end of it, oh, therefore, we think XYZ is a buy, or saying to you after pages and pages of results that something is rated 8 out of 10. We might as well give you the figure and show you how we calculate these things rather than just throwing you reams of research, which is what banks do. And please do feel free while I'm talking to send in the questions. I'll answer all of those at the end. And in terms of actual results, I'll mention that again in terms of how we did on the portfolio in 2007 and in 2012. I mentioned 2007 yesterday, but I'll repeat that when we come to that section. So thanks for the question, Penelope. I'll address it during the course of the webinar and anybody else's questions at the end as I go through this. So we wanted simple rules to profit, which I'll give you. Insider information, I don't mean in the criminal illegal sense. What I mean is people just didn't want to be lumbered with a piece of software. They wanted a monthly newsletter. They wanted all the research each month as well to give them an added color and flavor as to how to use it and why it works and so on. So I do a monthly newsletter, which at last count was about 50-odd pages long, because it covers, well, I'll show you in a second what it covers, but it covers not just equities, but global equities, ETFs, ADRs. It's for spread bettors as well as long-term value investors and so on. That's why it's so big. As I said, they wanted simplicity, but they also wanted expertise. They didn't want simplicity at the expense of expertise, so just throwing loads of things out and saying, oh, well, this will keep it simple. So that's what we did with this. And let me show you now how we manage to meet all of that. But make no mistake, just because you have a great piece of software doesn't mean you can just go away and quit your day job. What it does mean is that because time is money, you should be able to save immense amounts of time. In actual fact, the way the Alpesh Patel Special Edition came about, the way it came about was because I wanted to save immense amounts of time on how I was selecting stocks and finding them, and that's what I'm going to show you tonight of the reasoning behind it, so you learn something about trading and investing at the same time, or something more, because you all know you'll already know a lot about trading and investing, but something additional to that, what professionals do. But I also wanted, at the same time as saving all that time, to make sure that I was able to make profitable investments, that I didn't lose something just because I was saving time. I wanted the computer to do all the heavy lifting for me and improve my accuracy. So let's start off with our dashboard on Alpesh Patel Special Edition. I've made it as simple as ABCD, which is this. A, and I'm going to talk about all these bits and my favorite parts of it shortly, which is this, ABCD. A is the stock ratings, and I'll explain what those are, how I come to them, and why I created them the way they are. B is the Alpesh table, and I'll take you through that and why I like it so much. C are my radars. The one that I use the most is the momentum radar, which is what you see on screen there. That's when I clicked on momentum, and the radar basically means it's what I see of a stock with the settings, the MACD, stochastic, the RSI, just like I like it, and how to interpret that. I'll explain that in this webinar. And D are my various filters, And the one that I use the most would be value growth, and I'll go through that as well this evening, as well as touching a little bit upon bullish and bearish momentum for spread bettors. So it's partly for the long-term investor and short-term. But that ABCD basically gives you the whole shebang. And now I need to explain to you, well, how do we use it? Why does the thinking behind it make so much sense? And why does it save us time, and why is it accurate? How is it accurate? How good is it? So this is the overview of the last picture and explaining what everything actually does, and that's what I'm going to run through. But not only that, I'm going to give you the download link for the trading manual as well, so you'd have all of this information and data on there, and we're going to record this as well. But this is what I'm going to go through today. My filters, my favorite filters, my favorite radar, my favorite other parts of using the Alpesh Patel Special Edition. And just so everybody's clear, it was made in actual fact for every kind of trader. We looked at those who would be short-term traders, those who would be longer-term, those who would be just chartists, those who would be just into fundamentals, those who want to start with my stock ideas, and those who want to have their own stock ideas and then use my analytic tools on their stock ideas. And what I've ticked here is the bits of it that you would use. By the way, this is all in my trading manual, so you don't have to try and take photos of the screen or anything, and the trading manual comes with the Alpesh Patel Special Edition anyway. So it was meant for everybody from the short-term to the longer-term investor, and the chartist and fundamentalist, to those who had their own ideas and wanted a second opinion, or those who wanted my ideas and then they'd want to evaluate them. And they'll use different parts of it. Now that looks quite complicated on screen. Don't worry. What actually happens is, as I said, you soon work out what kind of a trader or investor you are, and once you've worked that out, you end up using 2 or 3 features all the time, over and over again. So I'm going to run through, as I said, my favorite ones, which in today's broadcast, I'll go over the overall rating, I'll go over value growth, I'll discuss actually bullish rating a little bit, I'll definitely be going over momentum radar, I will go over value growth, momentum value a little bit, bullish momentum a little bit, and bearish momentum is actually just the inverse of that. So in a way, I'm covering almost all of it today in today's webinar in any event, and the rest is on the trading manual. So let's start off with the first part of my favorites. My first favorite is the Alpesh table, and that's indicated by the number 1. If you clicked on the number 1, you'd get a table like this. I would then say it's easy as 1, 2, 3. I would then sort by the value growth rating, which I'll explain in a second, and why I think it's I'm going to brag this in why I think it's a stroke of genius, the value growth rating, and you'll see why in a second, and why only we private investors could do it. A fund manager would never want to do something like this. Alpesh value growth rating at number 2, and then number 3, where we click on momentum, and we can see charts of what we found. So first of all, what we need to know is, well, what's so good about the value growth rating? Why do I want to list something according to that? Because when we click on momentum and we find the securities which have the best value growth ratings, and I'll come to what value growth means in a second, then it allows me, after I've clicked on the number 1 there, momentum, it allows me to look at my number, you look at number 2, click on the monthly, it allows me then to see whether a trend is in place and whether the MACD is rising, preferably from below the 0 line, and gently rising. That gives me a view that both on a technical basis of momentum and on a fundamental basis of value growth, and I'll explain what goes into that rating in a second, that this is a good stock. Now that took me, what, 5 seconds? Not even that. If I wasn't talking, probably 2 seconds. Remember, for most investors, to analyze valuation metrics, growth metrics, technical indicators, it's going to take a heck of a lot more time. And then, of course, to rate and rank those stocks amongst their peers. So that was part of what the point of this was, to save hours of time. But, of course, it still begs the question, how good is this? And I'll come to that. The other aspects, that was for the longer term. What I love about the Alpesh Patel table is the ability to see those stocks pretty quickly and get an idea. Yep, I like it. I want to hold this. And these kind of holdings would be for 6 to 12 months when it comes to something based on value growth. As I say, I'll go through what's in the value growth rating in a second. But for those who are into short-term trading, the Alpesh table also worked because there I'd rank things by the price move over 2 trading days and look for the things with the most momentum, because that is for shorter-term spread betting type traders. And I then click on the momentum radar, which you can see at the bottom of the screen, so that I could see by clicking on the momentum radar, so that I could see the price chart and again check how the MACD and the stochastic was rising. Now I won't go into too much detail on momentum and how to read it and interpret it. And the reason for that, I won't go into too much detail, is in actual fact because it's in the trading manual that comes with the Alpesh Patel Special Edition. I'll tell you how you download that towards the end of the webinar. Now, one of the things that I want to get across is that that's for the spread betting, but the same table, you'll notice, was used for longer term investing. That meant out of one screen, without having to faff around looking at lots of different things, I could take care of my short-term trading and my longer-term trading. Yeah? So that was very important for me in that regard. I got a question, when did you first identify Centrica? This is actually from today, and even today, the value growth rating is 8, and you can see the trend. Now you can see it's slightly overbought, so we would expect some downward movement, but overall, with a value growth rating like that, for a 6 to 12 month period, I wouldn't have a problem continuing to hold something like Centrica. So that was taken, well, pretty much bang on today or yesterday on the chart. So the value growth rating at any given time allowed me to do the longer term investing, but the short term trading ideas came from this. Alpesh table, click, price 2 trading days ago, click, momentum, click, and it gave me the chart. So what are those stock ratings? What are those value growth ratings? So let me in that case move to my next part, my next favorite bit of the Alpesh Patel special edition, which is my stock ratings. And then I'll draw everything together because I've just given you stocks that I would like and wouldn't mind putting money in for those holding periods. And what actually first hits you with something like APSI is, wow, I just got a stock idea with all the reasoning which makes sense in 2 seconds. That can't be right. I'm supposed to spend hours on this stuff. So if anything, you get inundated with opportunities, and you get to know what you shouldn't be looking at, and it takes quite a while mentally to get used to that, to actually get used to that. Let me just return back to that Centrica, because I've just got a brief question. I say it looks overbought. How do I know that? On the MACD, Andrew, anything above 0 would suggest something is overbought. Some people would say you don't look at whether it's over 0 that it's overbought. You'd look to see if it's near its recent highs, and the recent highs being around there, and if it's near that, then it's overbought as well. So I'd say whilst it's overbought, nevertheless, because of the value growth rating being so high, I don't have a particular issue with looking at this for a 6 to 12 month period. So that being the case, let's look at stock ratings. And I said, then I'll put everything together in terms of once we've got these ideas, how are we going to use them? We're going to get some good ideas. How do we know they're good? What's behind them? Because I just gave you a stock and a number. You want to know, well, Alpesh, how do you get to that number? I don't just want to take it on faith. You can't give me a number and telling me it's going to be good. And don't forget, since 2004, Sharescope have been monitoring the performance of the stocks that come out. Not only them, actually, Barclays, because I've been writing for Barclays as well, have been monitoring. And you can see on the Sharescope website, sharescope.co.uk/Alpesh, the performance as well, which answered the question how we did in 2012. And what happens with it, of course, is, well, I'll come into more detail as to how we select them, because everybody doesn't want to just hold things for 12 months. Some people want to trade in the short term. But this is where my stock ratings come in. You'll see in the top left-hand corner the value growth rating, a bullish momentum grade, and an overall rating. What does all this mean? The value growth rating is for those who want to hold things for 6 to 12 months. It measures stocks, I'll explain it in more detail in a second. It measures stocks based on their valuation, things like price earnings ratios, price earnings growth ratios, and their growth, revenue growth, earnings growth. And it also incorporates some element of dividend yields as well. And it gives a score then out of 10. Well, how do you take all that fundamental data and get a score out of 10? Well, that's where our sort of clever genius algorithms come in the background. And what we do is we weigh the various factors, give them each a weighting and then a scoring, and then come to a mathematical number. And then we've looked at that going forward, and we've actually done rather well, as people who might have seen yesterday's webinar will have seen, and that will go up on the Sharescope website, will have seen how well that actually performs. Because what it allowed us to do is get a number for everything in one simple, easy go. Now, you might say, well, actually, Alpesh, I don't want your picks. I want your opinion on my pick. So you might say, I want your view on Topps Tiles, Alpesh. I'd go to my software and I'd say, right, value growth 9. That means on a whole combination of factors to do with valuation and growth. Not just valuation, not just growth, but everything. For everything. What it tells me is that on those things, on value growth, it's ranked right up there. Now, the bullish momentum, it can be graded A, B, or C. That examines a series of things, again weighted, the MACD, the stochastic, and the RSI, and it weighs them in relation to the direction they're moving, where they're moving from, in other words, the level of bullishness they have, and then gives them a grade. And you can see here it's given it an A grade. And that A grade may have been in place for the last 6 months, 12 months, 18 months for all I know. But all I can tell you is at the moment it still has an A grade in terms of bullish momentum. So I'm still not overly worried in terms of short-term momentum, and that's good for those looking to hold it for 1 to 3 months. So that's how that works. Penelope, you've written, but Topps Tiles doesn't come into your list of shares today. I don't understand. Doesn't come into my list of shares today. I should explain. Value growth rating is given on every single stock. Every single stock will always have that. The value growth radar is something different, and I'll come to that in a second. And we mustn't mistake the two. Value growth, something can have a value growth rating of 9, but not be on the radar, because the radar is there to give a very few number of stocks. A far broader range of stocks will have this 9 out of 10 rating, value growth rating of 9. Okay, so that's the value growth rating of 9. Which means that for a 6 to 12 month period, I don't have a problem when you look at all the fundamentals, which I don't need to do now because the computer has number crunched all of them for me. And don't forget, Sharescope updates every day, and therefore incorporates price changes or any fundamental data changes every single day. So these would change or not change, because the data might not be significant each day, but they'll change automatically for you. There's all that calculations. I immediately know I've got a view on every single stock instantly without having to do tons and tons of analysis, because it's already incorporated in there. And my overall rating actually ends up combining a little bit of both. The overall rating tells me that, okay, if I'm going to hold this for 6 to 12 months, am I going to be all right in the short term, or is it likely to sort of be very poor momentum in the short term, but longer term be okay, or vice versa? The overall rating says, look, short term, i.e. bullish momentum, and longer term value growth seems all right. And that box, the more grayed in it is, the better the overall rating for the security concern. Again, it's quite a bit of maths that we did to make that sort of convert all that data, all that information about valuation ratios, earnings ratios, all the things like return on capital employed, dividend yield, price earnings, pegs, all of these things, revenue growth, all of those things, all put into a box, then weighted based upon not just our research, but academic research over the last 100 years in terms of which of these factors tend to weigh the most on securities in performance over a given period of time, and then to be able to get that number and always feel, therefore, supremely confident. On an evening, I look at a stock, I don't need to worry, oh, what do I do now? What's going to happen? And so on. Always had a view. Let me go a bit more into each one of these and explain every single one of these in more detail and the thinking behind them in more detail and their accuracy in more detail. So in understanding stock ratings, what you get, you put in all that information about growth, valuation, income from Sharescope, you weigh it, and then you come to a number. So it allows you the most simplest way to get through more data that could be analyzed by an individual. You're not going to go through 3,000 stocks, surely. Or even in the FTSE 100, you're not going to go through all 100. By the way, before all of this existed, 10, 12 years ago, I would actually go through all 100 pretty much every night to see what changes there were. And that's what we all had to do. So in one sense, I put it like this. Online trading, free and easy. We make it easy as ABC, because that's why I'm going to keep on doing 1, 2, 3s and ABCs, through the algorithms that we use, the maths that we've put into it to weigh all of this, a whole bunch of other cool stuff. So I want to go through that cool stuff. The other part, before I go back onto the Sharescope Alpesh Patel Special Edition, is I send everybody a free monthly newsletter on who are subscribers to APSI, to the Alpesh Patel, the Alpesh Patel Special Edition. And so what I do is take all the data I get from places like Bloomberg, all the information I get from Coutts and Goldman Sachs and ABN AMRO and Rothschilds, and put it in to a newsletter which is intended for all of these groups of people: the short-term traders, value investors, FX, CFDs, spread bettors, ADRs, ETFs, the whole shebang. It takes about 24 hours each month to prepare, but it's fine, because that's my job is to read all this stuff anyway for my own asset management side of things. So in a way, it's not extra work as such, and that's why I enjoy giving it to my APSI readers. Another favorite part of being an APSI person for me is the stock comment. When you hover above this top left-hand bar, you'll see a pop-up box like this. And what it does is it gives you my stock comment on every single security, all 3,000 odd of them, which are on Sharescope, and it will give you the views what I think about its growth prospects, whether they're positive or not, based on their earnings, their turnover, what I think in terms of price-earnings ratios, whether it's neutral at the moment, or the ratio of price-earnings growth, whether that's positive or not, and from a technical perspective, whether everything's positive or a mixture of positive and negative. And that gives you a view on stocks you might own, or stocks you plan to own, and so on. It instantly gives you my comment for all of those securities. And that's for every single security as well. Another favorite, which still goes back to that value growth, and I'll go through this and the question that Penelope raised. One of my other favorites with the value growth filter, again, I'm going to make it as easy as 1, 2, 3, 4, and it's really love it. So if you look at where the number 1 is, if you click on that, you'd get the value growth. You get the value growth filter. Then I'd look at number 2, where I pick, okay, do I want it to analyze for good valuations, good growth, good dividend yields, all the LSE stocks, or just the FTSE 250, or just the FTSE 100, or just AIM stocks? So where the number 2 is, that's where you pick which stocks you want. And as I've written there in the filter description, these are stocks using my proprietary criteria, which combine medium to longer term value with medium to longer term company price growth. The list is a starting point for further investigation of stocks looking to target about 25% over 6 to 12 months. It's medium risk. So I go on to point 2. Then at point 3, I'll rank them. And what you see here is Alpesh value growth rating. So you see the value growth rating, but the value growth filter is even tighter than just the value growth rating. It looks to narrow stocks into the best of the best of the best. And it looks at additional criteria beyond what just the value growth rating would. So a 9 value growth rating does not necessarily mean something would make the value growth filter, because the value growth filter is very restricted, because it's meant to be a portfolio in a box. It's meant to be, right, this is it, 16 stocks, which I think in combination as a whole will probably rise, that portfolio of 16 with money divided equally between them, will probably go up about 25% in 12 months. That's the way I look at it. And the stop loss I place on any is if any individual one stock drops 25%, you go into cash in that stock. The reason this works is because you've got to understand what goes into the value growth filter. The value growth filter looks at a host of valuation metrics, growth metrics, momentum metrics, and income dividend yield metrics. So it looks at absolutely everything, and then it says, right, let's tighten these until we get the ideal scenario that we would absolutely want if we could have the best value, the best growth, the best income stocks, and let's see which meet all those criteria. And we're only looking for a 6 to 12 month period. Now, that then gives me the best of the best on that basis. And as I say, I'm only looking for a 25% return, and there'll be loads who might do better than that. That's not the point. The point isn't to try and get every single amazing security. It's to get a portfolio. And I only want about 14 to 16 stocks in a portfolio, because any more than that, and it's just additional transaction costs, and they don't make much of a difference to diversification. And any fewer than that, it gets a bit too risky because you're not diversified enough. So what happens is the value growth filter I absolutely love. I click on that. Somebody says to me, which stocks do you like at the moment? That's the one I always go to. And it's been consistently accurate. Well, we based a whole asset management company around this. I'm actually in the office at the moment here in London, and it was using this kind of technology which allowed us to build the asset management company, because without software to number crunch and tell us which securities are the absolute best, you just couldn't do it. You couldn't go through. You didn't want reams of people going through all of this stuff. Now this democratizes investing, because it means private investors get access to this kind of know-how, whereas previously you'd have to be a stockbroker and he'd look at this and say, yes, well, on our buy list is this. So how did I come to all of these numbers, value, growth, ratings? How did I come to those? Like I said, went through all of that fundamental data that you see in company annual reports and so on, and then weighted it, and then came to scoring and then filtration process. And the idea is you've got a portfolio. So that's one of the other favorite parts of the Alpesh Patel Special Edition. And the idea is it gives you names like this. Now, Aberdeen Asset Management has been on the value growth filter for quite a while. It was on about 18 months ago. I think it's when it first came on. And this is a picture of it during the course of that, because anybody who's been getting my Alpesh Patel Special Edition newsletters will know over 18 months ago, I started suggesting Aberdeen Asset Management, and we've done rather well out of it. So for even those people who then don't bother to use APSI, at least through the newsletter each month, they still get to get all the hard work as well. Penelope said, which one of your 9 rated stocks are better? How do you differentiate them? I don't try and split hairs between them. And the reason is why I don't need to. I'd rather have 1 or 2 in there. If I really wanted to differentiate between them, I might drill down and look at the pegs. Let's say I might look at the momentum. I might look at the constituent parts and say, you know what, I really want something with with the lowest of all valuations, even though it's got a 9 rating. But the whole point of having the numbers out of 10 is that you then don't need to deconstruct it. Otherwise, you might as well stay deconstructed. So that's why I wouldn't. But if I wanted to, then one of the things that I start looking at is obviously the constituent part. Now there you can see, say, between 888 and Bruin Dolphin, both are 9s, that the yields are about the same. So I might try to differentiate on pegs and say, well, Bruin has a better peg ratio. Or I might click on the momentum and look at the chart of it and say, yeah, it's showing me a better chart position out there. So anyway, the point with Aberdeen Asset Management with the value growth ratings and the filter was it would give me stocks before they started taking off, which were undervalued. And because they were relatively undervalued, they couldn't really drop much further because they were already undervalued. But because they were growth stocks, so not just undervalued, it meant sooner or later, and preferably sooner, they would start rising. So they would give me the traditional hockey stick, which is what we all want in investment. Limited downside, much potential to the upside. And that's exactly what then started happening with that, with with Aberdeen Asset Management and a number of others. So that was value growth, and yesterday's webinar that I did, the second webinar in this series that I did, showed a lot more examples and the performance of portfolios as a whole since 2004 when we first started it. Now in 2007, we beat the market. Fat lot of good that was. We were negative, but at least we beat the market, so some consolation. So I can't guarantee being positive when there's a complete market crash, but beyond that, we have good results. Certainly better results than the cost of the software. So that was, that was good news for us in terms of the ability to produce that. But that was just if you took the portfolio as a whole and said, right, I'll just buy and hold. Like I said, we're using this for the short-term traders as well, but also giving a view on all stocks. You at least had a really good view on all your securities. Advice, basically being your own stockbroker, having the stockbroker in your pocket without having to read lots of research, because you knew on terms of valuation and growth what was happening. But one of the other favorite parts, again, I'll say favorite part of the Alpesh Patel Special Edition is my trading manual. So I put this together based on all the best bits of the book, really focused for traders, and I will write down what that download link you can see, where you can actually download. You can download the I'm going to write this for everyone. Here we go. There we go. So everyone's about to get the link. But also Sharescope will send it to you. So you can see the link there. Everyone should have it. Or you can download my user guide, basically my trading manual, which shows all of this kind of stuff. I won't go into all of this at the moment, but it shows all of that kind of stuff as well. So let me therefore progress. And regarding questions, I will come back to them. I'm not ignoring any questions. I will come back to them towards the end. So the trading manual was something which became my favorite, which allowed me to see all this kind of stuff and explained all of this. So it explains the value growth filter in detail with images that you saw on the previous screen on all of these parts, everything that I talked about, which I've talked about relatively quickly. But it meant that in creating this, we were creating the software with all of these methodologies within it, the monthly newsletter distilling all of that, the extensive step-by-step trading manual, the link I've just given you, free updates, of course, and access to trading webinars and videos that we were doing, and then, of course, customer support for trading queries, some of the queries I'm just about to answer in a second. And let me, therefore, continue with the webinar, go back over some of this by answering some of the questions, because that's actually the best way often to learn. So one question is, what about timing into the market? I bought EasyJet 10 days ago, but if I'd taken a position a day later, I could have had an extra 9%. If you're a short-term trader, like you're trading over day to day, yeah, you're right. What you do is you would look to time it by looking at, you'd look at something like this, you'd look at the momentum there, and then you'd read the trading manual on how to read and interpret the MACD and the stochastic. Are you going to get it right by knowing to wait an extra day? Almost certainly not, and I wouldn't even advise it. And a 9% difference between one day and the next is rare, statistically insignificant. So I wouldn't lose sleep over that had you waited a day, because there's always going to be an if-then. But not only that, nobody says we're going to pick the very bottom of the market or the very top of the market. That's not the point. So if it's not short-term trading you're looking at by looking at this, then it's got to be the slightly longer term where you're looking at this. And if you're looking at a 6 to 12 month period, yeah, sure, if you'd waited an extra day, it might have made a 9% difference. Normally, an extra day makes next to no difference on stocks. That's how it happens. Next question, how do you access the monthly newsletter? All subscribers of Alpesh Patel Special Edition of Sharescope get that on their, get that automatically through Sharescope. What happens is when the newsletter is done at the end of the month or shortly into the new month, when you do the regular download, it'll pop up on your screen and you will receive it. So it's a free part of the Alpesh Patel Special Edition of Sharescope. So when you subscribe to that, and I'll give you a link which shows you that link shows you more information on past performance and some of the great feedback we've had from Sharescope users. That website and everything on there is maintained by Sharescope, so it's all independent. Independently verified the performance of everything that I have done since 2004 using that, and the user feedbacks, because people email them, not me. Another question was on Topps Tiles example, MACD going from 0 up, but stock overbought. So yeah, remember, let's look at the Topps Tiles as an example so it's easier to understand how we weigh all these things. When I'm looking at something over a 6 to 12 month period, then I'm going to weigh most the value and growth ratings. What the technical indicators are doing in the short term, whilst important, is not going to be an absolute deal breaker that, oh, wait a minute, that's slightly overbought. Because remember, the stochastic tends to be a fast indicator, and the MACD tends to be lagging. So what tends to happen is stochastics, by the time you want to buy something, stochastics going to be overbought anyway. So I'm not so worried. All I wanted to see was, are they going in the right direction? Yeah, okay. They're a bit both overbought, but they're overruled by the value growth rating because it's a 6 to 12 month holding. And in a 6 to 12 month period, both of those may well go through a cycle of rising and falling. The most important thing for me is the value growth rating when I'm looking at 6 to 12 months. If I was looking at bullish momentum, then I know that the most important things, and that's how they're graded, would be where these indicators are, and that's how I look at those. Other questions coming up. For short-term spread betting, do you get in and out within days or 1 or 2 weeks? With spread betting, remember, with spread betting, you can actually do a spread bet over a whole year if you want. There's nothing prohibitive about that at all. But with the short-term spread betting, it all depends. It could be intraday. If I'm looking, let's look at this chart again. If I'm looking at a chart like that, then most probably the exits are going to come a lot quicker. And the nature of the exits tend to be, because I said I'd talk about momentum and exits in today's webinar, the nature of the exits are that for the value growth income filter, when I click on there and come to stocks such as these, then remember the exits and the rules for that, as you would see from the manual that I sent the link to everybody to, would be that you exit after 12 months. That's just the rule. And there's a reason for that time-based rule, which was explained on the webinar yesterday, because it avoids us exiting based on our entry criteria. And the reason we don't want to have the same exit criteria as our entry criteria for a long-term holding is because we want stocks to be overvalued, very overvalued when we exit. We don't want to exit because they're no longer undervalued. We want to exit because they're seriously overvalued. And that's the best way I discovered to do that, was to have a time-based exit of 12 months in the case of stocks which are found by this filter, the value growth filter that you see there. Other questions? Can you suggest at what levels it's sensible to double up and triple up on investments in individual shares? The only time you ever want to add to a winning you ever want to add to a position is if it's a winning position, so never add to losers. And in terms of doubling and tripling up, remember you'd be adding to your risk and concentration in your portfolio. So the times that I say to people, consider adding to a position, is if you had already bought with not having your full allocation in that stock. So if you said, I'm only going to buy 10 stocks, each 10% each, and in your first one you hadn't already done that of 10%, let's say you only bought 5%, then you can double up and get to your 10% allocation. But you don't want your portfolio to be skewed, and you don't want to be doubling and tripling up and getting portfolio concentration either under most circumstances. For trading on leverage with a risk of approximately 2% per position, is there a recommendation limit to the number of open positions? Open positions, if I'm trading actively, I don't want to be trying to monitor more than about 3 positions at a time. So if I'm trading actively and that means I need to be in front of the screen all the time, then I don't want to have more than 3. But if I'm looking at positions which, and the 2% rule really goes, it sort of almost becomes non-relevant to how many positions you might be monitoring, because actually once you start monitoring 3 to 4 on the short term, then that's about right, because let's say all 3 were wrong, then you're down 6%. Now if you're looking at a longer term holding, a 12-month holding, because of this, what you see on screen now, then the stop loss that I have there also works out at this 2% per position rule, because what you do is you've got 16 stocks equally invested. Your portfolio is equally invested in all 16, and there's a 25% stop loss, which means that your individual risk is under 2%. So there, what's the number of open positions? It can be 16. So if it's longer term, I might have 14 to 16 positions open. If it's very short term, then it really depends on the number of, the number of positions I can monitor. Okay, let me see. I'm going to start right at the top of all the questions. How do you use the overall ranking, which if arranged best or worst at the top allows me to spread bet long on the short on the bottom 4 and so on? No, I wouldn't necessarily say, Christopher, when you rank these stocks, go long the best, the highest rated ones and short the bottom. It's not a system we've tested. It should work, by the way, but what I'd probably say for something like that in terms of spread betting ideas is to do it the way I mentioned, which is I tend to look at performance over the last couple of days to see where there's already some momentum, and then start looking at the chart. So it's 1, 2, 3, Alpesh table, rank 2 trading days, and 3, look at the momentum chart and see which way the momentum's going and do it according to that instead. So that's what I'd say with that. Is it best to buy all the portfolio, which AP suggests all with 9+ average results? How do I differentiate? Is it best to buy and then double up if, say, a given share increases 5% within, say, 2 months? No, the way I've set that portfolio up, and it's not that you'd buy all the 9 ones. If you're looking at buying a portfolio, then you're going to the value growth filter. So you wouldn't necessarily look at those. You could see, the idea with this is it was made to be really simple. So the idea was you bought it and then went away for 12 months. You set a stop loss of if any one stock drops 25%, you sold it into cash and you held the rest as they were. But some people have come back to me and said, well, actually, I want to improve upon that, Alpesh. What I want to do is only get your initial ones, like your 9s, or I only want to put in, like you've mentioned there, Penelope, I want to put in a little bit and then I'll add to it as it starts performing. And all of that's fine. That's absolutely fine. You can tweak it. But this is the most simplified version where you would just buy, hold, and forget. So there's nothing wrong with the strategy that you've suggested. I've answered that one. Please say a sequence of selection without deviating to side explanations for A, long-term 12-month, and B, short-term. Please say a sequence of selection. Okay, let's go for long-term then. Let's go for long-term. So if I was to get long-term, which means 12 months to me, then the sequence is this: 1, 2, 3, 4. 1, click on value growth. 2, select whether I want them to be selected out of just the FTSE 100, the FTSE 250, or all the FTSE stocks or whatever. 3, rank them, and then that's it. 4, I might look at the charts on each one just to make sure that I'm happy with their momentum, and if I'm not, I might buy some of them, but a minimum of 14, or say, okay, I'm going to buy 14, I'm going to buy 5 for now, and the rest I'll add as I go through this week by week and add new names to it. That's the very simple process for long term. That's 12 months. And the short term, the very, very straightforward process, again, 1, 2, 3, 4, is this. Actually, let me put it in here we go. 1, 2, 3, 4. 1, click on Alpesh table. 2, sort by price 2 trading days ago. And by the way, this is in the first of the 3 webinars. I've gone into the short-term trading, and all 3 of those webinars, today's being the 3rd one, should be on the Sharescope site. 3rd one will be on in 24 hours, but the original 2, yesterday's and the one before, should already be on there. So 1, Alpesh table. 2, price 2 trading days ago. 3, then click on momentum to see how the MACD and the stochastic is moving on that. So that's that one. I'm just going to go through all of these. That's that one. Next question. Does this work for Forex? Jenny, so the bits that work for Forex are obviously the momentum radar works for Forex, but obviously the stock ratings don't, because Forex doesn't have price earnings ratios and so on and so forth. But Sharescope works on Forex, and so the bits that you'd use my and I use Sharescope aptly for Forex. I use the momentum radar the most for Forex. And I explain how I read momentum and understand it in the downloadable manual on there that I've provided. What is your exit strategy for short-term trading? Look for momentum to drop off. That's actually quite a complicated one, and I've done separate webinars on exit strategies for momentum trading. On the whole, for short-term momentum trading, I wait for a 2-day low, a 2-period low rather. So if it's daily, then it's 2 periods to exit half the position, and a 3-period low to exit the other half. And actually, that's all explained in the manual, which I've provided the link to. I'll just try and do that again. Let me give you the link for anybody who didn't get it already. So those are explained in the manual there. There we go, on the exit strategies. But I use for short-term trading, 50% exit on a 2-period and a 50% on a 3-period. And the reason for half and half is what I think is a relatively clever way of doing it, is because if for any reason I'm wrong, then at least I've got half my position. If I'm right, then at least I've got rid of half my, if I'm right, at least I've got half my position. If I'm wrong, at least I got rid of half my position. So that was the reason. With the explanation there. Which metrics are used to define growth and value? Tony. Yeah, Tony, let me explain. Growth and value. Value, I pretty much look at virtually all the stuff that's on Sharescope, but I weigh it differently. So some of the more esoteric stuff, like return on capital employed, for argument's sake, would have a lower weighting in there. Valuation is the traditional stuff you're used to. The highest weighted is price earnings ratios and price earnings growth. For growth, it's revenue growth and earnings growth tend to be the highest weighted, but we look at a whole collection of metrics, because what plays on a security and influences it and causes it to move are a whole range of things, and so we need to weigh them as well. How reliable is it to set a stop loss on a share so it's traded if you are away? I found with Barclays that they allow this and sell it. I wouldn't do that. I wouldn't set something and then just walk away. I don't like doing that, and the reason is very often there might be reasons why you would not have got out of that trade. So I think that level of automation I don't really enjoy. I far prefer being in front of it, and if you can't be in front of the screen, then spending some time, some separate time instead to just a longer period of time, so it's a daily chart and so on. And actually I have videos on momentum which are on the Sharescope site as well, and some parts of how to trade on all of this there. Do you ever change your weighting strategy? Have they been consistent since you started? They've been consistent. In a way, they sort of, the way they're done means that even in a bear or a bullish market, in a bear market, you might have fewer stocks, but they're going to be higher quality. And it might mean that you've got to take a week or 2 weeks before you find the best ones. But that's the definition of a bear market. Everything isn't as good as we thought it was. So there isn't the need to weigh as frequently or change those factors, because the way they were created and the research we based it on suggested to us that yes, it may mean that there might be stocks which will do incredibly well which aren't in there, but that didn't matter, because as long as the ones that were in there did incredibly well, what do we care if some other stocks are doing well which we didn't pick? So that's how that happened. How do you use the bull and bear filters? Yeah, the idea with the bullish and bearish momentum filters is there for the shorter term outlook, the 1 to 3 month outlook. And when you click on those, they'll give you a list of stocks which are showing short-term bullish momentum or short bearish momentum. And that's a 1 to 3 month period that I'd be looking to hold those and trade along those in. So it tends to be quite good for intermediate range trades. So not the very short-term hold for a few days and not the very long-term value growth as well. It's that swing trading in between for that. Please explain the radar chart. Yes, so the momentum radar is this is what the chart is. What the chart does is show you, and let me just take you through it. As I say, it's on the manual as well. What it does is it shows you the MACD, the stochastic, and the RSI. And what I'm essentially always looking for is a rising MACD in this particular time frame and the next out time frame. So if I was looking at the daily, then I'd also want to make sure the same thing was happening in the weekly, and so on. And this is what in the newsletter where I feed you the names which show all of that, I explain. But it's also what in the manual shows things like this. But it's also what is embedded on there. Because some people say, no, I don't want to read a manual. You just tell me, Alpesh. I do that in the newsletter. Others say, well, actually, I want to go through that, and I just want your names of stocks on which I can apply all this analysis, and that's what the idea of this is. It sort of works for absolutely every category of individual. I wanted a piece of software which works whichever grouping you work. Do you ever do long-term shorts on equities? No, not really. I'm trying to think. That I have had shorts for prolonged periods of time, but it's not like Evil Knievel who does long-term shorts, so not really. Although I do in my newsletter often mention ones which are short and I think will remain in a downtrend for a long period of time. So I do mention that in the newsletter each month. Sorry I joined late. Even if overbought, would you still hold for 12 months? Yes, the idea with all of that is, with the 12-month value growth income portfolio, and let's just go to that now, is that the preeminently most important thing is that it's value growth. It's only secondary that the momentum might be overbought. Now, I would ideally like it that on the monthly chart, I would ideally like it that on the monthly chart that the momentum was moving up slowly rather than it being overbought. So, Jenny, you're right. My preference would not be for the overbought. And again, I mentioned this in the manual, but I would still not. That would not be a bar to getting in. How do you come over the shorting mentality when you see stocks gone up too much? That's all got to do with your risk management and your entry and exit, which is a bit too complicated for this webinar to go into, because in actual fact it relates to average true range. And I go into it in my first webinar that I did in this series last week, which should be on the Sharescope website, where I talk about stop losses. And it's in there. If you don't find it, just email Sharescope and they'll tell you where the first of the 3 webinars was. So I go into average true range and stop loss mechanisms, and exactly what you've asked there, Raj, I go into. So if there's no more questions, what I'm going to do is, I say, wrap up and just explain. You know, as part of the subscription to Alpesh Patel special edition, so sharescope.co.uk/Alpesh, as well as the software with all this know-how embedded in, you've got the monthly newsletters, you've got the ability through customer support to ask me questions through Sharescope, my step-by-step trading manual. I say the monthly newsletter I absolutely love doing and giving all the perspective on it. I think that in itself is worth gold. And of course you've got the free updates which come with Sharescope and the APSE, and access to the webinars that I do, and also the training videos. And you can email me and say, look, I want a training video on stop losses, on exits, on long-term investment, and I'll create those because a lot of them will already be on there when you're members, and you'll be able to see. But if you want anything specific, then essentially it's one-to-one mentoring, because I know if one person asks me, 100 people will want to know it, and the best way to answer 100 people is not to send, is not just to, well, it's to actually do a video. That's the best way to answer 100 people. So what I like to do for my Alpesh Patel Special Edition users is, you know, tell me what videos you want, and I'll create them, and I can train you that way. It's the closest we can get to one-to-one training. As members of APSE, is you say, well, Alpesh, look, explain to me a bit more about short-term trading, explain to me a bit more about exits, explain to me a bit more about running profits, or anything else. You've got that as well as members throughout the whole year, and that's what I do. I put those together in either webinars or videos, and then we upload them on the Sharescope website for you as well. As well as, of course, you can email me in those questions. So I want to thank everybody who's spent this lovely, what's turned out to be actually quite a lovely April evening with me, and we're going to do more webinars. I do hope you come and join me as a AppSy subscriber and get my newsletter. It's exclusive to AppSy users, and I hope to hearing more and more from you. Thank you all very much indeed. Thank you.